Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It's Thursday. Yesterday, man. You know, I wasn't able to stream it yesterday because somebody wanted to do a meeting at that time. But I was watching it. Oh, actually, I'll show you guys this in a second. Let's look. We do have some news here coming through. U.S. GDP. Oh, it's not showing me yet. What's with that? Have these numbers not been actually released? Let's see here. No. I just need to refresh. U.S. GDP quarter for quarter, 3.1 versus an expected 2.8%. And then initial jobless claims a little bit less than expected at 220 versus a 230. PCE prices final 2.2 versus 2.1. So all of those numbers kind of slightly hawkish. Market not moving too much off of that though. And let's see here. We come down to the charts and let's kind of review what happened yesterday. Okay, so remember earlier in the week when I said, you know, I wouldn't be surprised if the Federal Reserve meeting ends up being a cut, but that the market sells off because everything else about it is hawkish, and that the forward guidance is hawkish. And this was kind of like a key point to see, like, what are the chances that they continue to cut rates? And it seems that the median expectation is that they will do 50 basis points, but there were way too many people on the committee than I am comfortable with saying that there will be 0 cuts in 2025. So yeah. Octavia says carnage. It was carnage. You can't really see it on the 30-minute because in the 30-minute it looks like it just went like whoosh. But it was basically like a just sell off all afternoon. It was pretty wild. S&P 500. Oh, you see, it does put it on here. Well, you can't really see it because it puts them all on. So yesterday we were having, we're looking at our robot and I was like, no, there's something wrong because it's not taking any trades, and we did solve the problem. So the robot took trades during the FOMC, and I'll show you guys that here in a bit. Okay, so S&P 500 just absolutely slaughtered. In fact, for both of these, we've got to go out to daily charts. So when you come on the daily chart on the the Treasuries, new lows, a little concerning. Oh, maybe not for the year, but new local low. Okay, the year you still got a bit to go, but it's a little bit concerning. Okay, it's a little bit concerning over there in the. And then here, again, I got to turn off the text markers on these charts. Okay, that is a pretty big hit to the S&P 500, and it's been on such a big rally. I'm a little concerned because, I'm having flashbacks. To 2018 when the market didn't like what came out of the Federal Reserve meeting, and then it just threw a complete fit all through the low liquidity holiday season. So I don't think that this situation is quite the same, because I think that the market did kind of expect them to be hawkish, but just maybe not this hawkish. Okay, oil's doing okay, but they have backed off of that 71 resistance. Gold and silver got just absolutely crushed from this. And copper got it's down as well. There was a moment where we thought, hey, maybe copper's actually gonna continue. No, they got crushed. And the Japanese yen, oh boy, that's actually a little bit of a concerning drop in the Japanese yen. And the dollar higher. And then we got Bitcoin. How much damage was done in Bitcoin? Well, Bitcoin, it did decline, but you know what? The damage isn't that bad. The damage isn't. Oh, you know what? I'm not even showing you guys over here. I'm not. Did that whole thing, all those charts that for historical purposes we have to show oil, gold down, silver down, copper down, Japanese yen down, Bitcoin down, but it actually weathered it fairly well. No, wait, that's not it either. My goodness, guys, Seth, get it together, Seth. Get it together. Let's try it again. Oil, gold, silver, copper, Japanese yen, Bitcoin, for historical purposes. It's weird that the Fed cutting cycle is coupled with higher yields. I feel like that everything about this situation is weird. Now, 10-minute timer says, do we start blaming Trump? I kind of think we do. Okay, like, I hate referring to zero hedge to make a point, because I think that they are often way too political, and they say and do a lot of kind of stupid things, frankly. And I really think that zero hedge, I think that what zero hedge was is somebody came along and said, we want to have a financial news website. We just want to be like, make as much as we can. And so we're just going to say in the most sensational things. I feel like that there's a lot of sensationalism, but it's also one of the only places that we really get good hard data, that we get leaks from, like the report, good research from the street and all of those sorts of things. So in our position, zero hedge is like an essential resource to read, and I have a love-hate relationship with them. So one of the things that they've kind of been doing is that I would say that zero hedge is pretty much explicitly pro-Trump. Is this the article? This isn't actually the article that I want. I'd say that they're pretty explicitly pro-Trump and are getting down off of anything that seems like it's not in line with what Trump and Trump supporters would like. It's not that one. Long 28. It's going to be really curious to see if they continue the downside today or if they retrace a little bit. This one. It's this one. There we go. So here you can see, like, the thing that really shifted the market was the dot plot. You can see the shift in expectations on the dot plot is all moved higher. Okay. So, well, let me just read it, because I think that they make a good point. And I really think that we can't ignore this theory. I think it's a theory, but I think it's one they can't ignore, because I think it's the best explanation in this situation. Okay. As a reminder, less than 3 months ago, the Fed slashed rates by 50 basis points. Crisis style cuts. And today, they hiked their inflation and interest rate forecast dramatically, but left the unemployment rate basically unchanged from where it is now. Okay. WTF changed. They're making a good point. So it's like 3 months ago, they were cutting. They haven't changed their unemployment forecast. So if it was like a dire thing 3 months ago, and you haven't changed your expectation on unemployment, then shouldn't it still be a relatively dire thing? Unless inflation has really, really come back hard. I would say that it has not, but that there are some signs that it will be coming back up a little bit. Now, the issue with that one is that, you know, it coming back up is something that I would only expect to last for like a quarter or two. And so should weather it, and then they do more cuts later in the year, I would think. Okay, well, Zero Hedge asks, what changed? Bigly, one thing. And here, what they're showing is they are showing rate expectations with the Trump-Kamala odds on the election. And as soon as Donald Trump started to win, you started to see the rate expectation shift. So it is Trump. It is Trump. The Federal Reserve, they're not saying it, but I think straight up the Federal Reserve is being more cautious on cutting interest rates because they're concerned that Donald Trump's policies will increase inflation. Like straight up. And honestly, I don't think that we can rule out that there can be some kind of unconscious bias there against Donald Trump, and so they're kind of not, you know, gonna hold the interest rates as favorable for him. 2025 will be a bumpy ride. I think so too. Like, the thing that I see coming back to this, I mean, surely I'm not the only one seeing and talking about this, man. When we come to a chart of BES in particular, that is like the most significant down day on the chart. I don't think we have a bigger orange candle. Oh, maybe we do. Dude, this one was a doji. Okay, but that was during August. Yeah, it could be, you know, and by so many measures, the market is overvalued. I kind of feel like that in the modern era, we should always expect the market to be overvalued now, because the markets are really more a reflection of how much liquidity is out there. So markets should probably always be overvalued. But it's just been up so much. And things are so tight. Like, there are some things in the labor market that are concerning. That non-farms report 2 reports ago was really bad. Now, one thing that I am seeing is that markets have kind of the labor market has kind of picked up in December, actually. So I think that what's happening is that, like, in November, there was a lot of people, you know, they don't want to do anything because it's going into the holidays and whatever, right? And now it's like they're going to start doing stuff in January. You got new payroll, new initiatives, all of this sort of stuff. And I'm seeing companies are getting ahead of it, because now in December, I'm seeing a lot more companies that are like actively looking and so forth. So maybe there is some reason to be concerned, you know, for the Federal Reserve to be cautious. But then the thing is Donald Trump's going to become president. He has so many day one moves. And I mean, it was like that in his first term. But in this term, some of his like more controversial things are set up to be day one changes. Like, people are going to have conniption fits on day one. It really will be. And we'll see how the market reacts to it. There's going to be so many changes coming in that I really cannot predict how it turns out. Sometimes the market will get like way super concerned about something, and they always overcompensate for it, right? Like, realized volatility tends to be more than implied volatility, right? But then they always work it out and the market goes higher. So it might be like a bunch of like freaking out and all of this, and then like, oh, actually it's not that bad. We'll see. He kicked out a lot of people. Trump has only got loyals in with him now. Yes and no. I'm actually, you know what? I'm not sure. I'm not sure. So the thing that I see in the second Trump administration is that he has picked up a lot of people that are kind of like Silicon Valley tech people. Like there is a group of people like especially the guy like David Sachs, the guys from the All In podcast. You know, they've kind of been, because at the beginning, these guys are not people that I would consider to be like, I wouldn't consider them to be Trump loyalists. You know, like they were interviewing Democrat candidates on their podcast and kind of acting like, well, we don't really know, like maybe we'll go with this, maybe we'll go with this. And then at some point they kind of consolidated on Trump. Like Trump is the guy that is going to do the things that we want. You know, we have some problems, we're going to solve them. But it seems like that the problem that the Silicon Valley tech group is most interested in, let's not even call it the Silicon Valley. Let's call it the entrepreneurs, because Elon Musk is a key component of that now. Vivek Ramaswamy is probably a key component of that now. But all people that you know are practically billionaires now because of venture capital. And you know, I wouldn't consider them ideological allies, and I wouldn't consider them to be the type of people that if Donald Trump does something that they don't like, that, you know, they will sit down, shut up, change their view, and just go along with what the leader says. You know, like I just don't see them being yes men. I really don't. So there's that group. There is a group of yes men. There are some people, like particularly certain congressmen and stuff, that have basically been all in on the MAGA movement, and they will jump off a bridge if Donald Trump tells them to, right? But there's another group that is not. And, you know, Donald Trump had such a hard time in his first term because it was like, you know, he put all of these people into different posts, and then it turned out that some of them were actively working against him the whole time. Never liked him and were actively working against him. And have they like gotten rid of those? I'm not really sure that they have. And then there's another group that if Donald Trump makes a shift. So the thing that is about Donald Trump that I think is unique for a politician, and part of what makes him such an effective politician, is that he is about getting stuff done. He will pivot. He will pivot hard. It is so... The first time that I saw it on like the Donald Trump subreddit at the time, like on the Donald, or now Patriots.win, the first time that I saw it, it was like really jarring to me. It was like, you know, everybody thought one thing, and then Donald Trump changes his policy, and everybody just magically overnight pretends that that's what they always thought. Having doubts about Johnson now, yeah, it's just, I don't think that Elon bought his way into the group though. I think that that group, what they are really concerned about the most, from what I can see, is the debt. They are concerned about the debt. And you know what? Like, it's okay to run a relatively large deficit, but it has gotten too far. It has gotten too far. We do need to do something about it. I'm not so sure that it's like a all hands on deck situation. The problem that I think you're going to see, the thing that is probably going to hurt the Trump administration the most, that they're going to struggle with the most, is that Joe Biden in particular really leaned hard into a kind of like what I would call Obamonomics, where you really use government activity to prop up an economy that is fundamentally weak. Like during the Obama years, growth was always really slow and they were never quite able to get it to go. You know, Donald Trump gets in and like immediately GDP for those quarters like skyrocketed. And so, you know, like they are modifying what they do with the treasury and all of those sorts of things to kind of make up for shortcomings in the private market. And that has kind of resulted in a larger portion of the economy going to government. There are like more government jobs and more like really good jobs that are government jobs now. And so Donald Trump and his crew coming through with a wrecking ball, you know, they're going to lay a bunch of people off. Like straight up, they're going to lay a bunch of people off. And if that's like the thing that's propping the economy up, it's going to hurt economically. It probably will. So I'm a little bit concerned that like, because that group treats it as such a dire thing that they'll go too far and like push the US into a recession because they got cut government too quickly and too hard. But let's see. Let's see what happens. By the way, treasuries, man, really reversed hard and are down at the lows now. It is, but the whole Elon, you know, the one that I think is more interesting is, sorry, what's the name of the CEO of Facebook, man? Mr. Zuckerberg, is that what it is? Mark Zuckerberg. Yep, that's right. Because, you know, he did some things last election that really helped the left. And he kind of came in and said, oh, I don't think that I realized, you know, that it would be that partisan of a thing. I actually kind of believe him. I think that maybe his involvement in politics is a little bit naive, to be honest with you. But he's kind of turned into like, I think we went a little bit too far. And he's kind of been supporting Trump, you know? Oh, I don't know if it's a 60% chance of a recession. But I don't think that I can put it at a 60% chance of a recession because what they're actually going to do is still a little bit too uncertain to me. So. Anyways. So us coming down here, one would have to be concerned about if there is a large meta order in the market. But when I look at the cumulative deltas, I'm not really seeing a huge shift over there. And, you know, I would be concerned about there being huge icebergs sitting on the offer. And at the moment, it doesn't look like that's actually the case. So, bird flu lockdowns. I mean, I'm sure if Donald Trump could do it again, he would not have accepted lockdowns, right? Dude, I am, Brandon, I am so frustrated by this UFO thing. So, like, I've been really interested in the congressional testimony that we've been getting about UFOs and like government insider whistleblowers straight up saying that like we've had contact with aliens and alien technology and stuff like that. Like there are people that are like straight up saying that. Now, I'm not sure that that's actually the case because the people that are saying this are not saying from a first-hand account. They're not saying like, I saw, you know, I worked in this lab and they had alien bodies or we were recovering UFO craft or anything like that, right? There's people like Bob Lazar that say that, but like who are the people that like have direct experience with this. And these whistleblowers are not saying that. These whistleblowers are saying there are people inside a government that are telling me that, and they're afraid to testify and stuff like that, right? So, like, they could just be getting bad information, right? And there have been some sightings and instances lately that are really, really, there's something going on. Like these reports, like of Langley, of like a UFO, of a drone swarm coming off of some sort of mothership thing and shutting down the Air Force base and then disappearing, and them doing that like night after night, right? So then all of a sudden, we start to hear things that kind of suggests that that is happening in New Jersey. And as soon as you start to see that, the internet gets inundated with UFO sightings that are clearly bullshit. Like, if somebody else posts another video of zooming in on an unfocused Sirius or Venus, I just can't. It makes me so angry. This is like, do you guys never look up at the sky? My gosh, I just can't believe it. It's some of these guys have to know. They have to know that they're posting something that is just like outright hoax. No, that is not an orb. That is just serious. That is. Have you never used a camera before? Haven't you ever? I saw this one where it was like they had the bokeh and like trees were kind of obscuring the bokeh to kind of make it look like it was moving or rotating or something. And I was like, haven't you ever like squinted and your eyes kind of will create bokehs, and then you can kind of see like your eyelashes in the bokeh? Haven't you ever done that? I don't understand, like, what the man. There is some people are posting UFO sightings that I just can't imagine why anybody would think that that's you. Like, how dumb are you people? And so I've had to just completely like, you know, when it's on TikTok especially, I see anything about that on TikTok, scroll on, because all of the people posting videos about it are complete idiots. And it's so frustrating because there was something weird going on. And now, and I don't think that it was, my theory was that it was Red Ops, that like the US military was, you know, they have these groups that will kind of show like, okay, can we do this to you? And then they do it, right? And now there's like so much noise. I think everybody's just going to forget about it. That's frustrating. And now everybody's saying, oh, actually, this was the UFO invasion. Okay. That the robot predicted. I just... Okay. Oh, yeah, it went good. They wanted to talk to me today, so I'm going to be going in today. I don't know. We'll see how it goes. They start at 8 o'clock in the morning, my time, which basically means that we'd only be able to do an hour stream. I think what I will do, if that happens, is I will start the stream, and then I will just let the stream go without me for the 2 hours afterwards, and like teach my wife how to stop it or something like that. That's what I think I'm gonna do. If it comes down to that, I don't know. We'll see. It might not be. It might not. It seems like a good fit. It seems like a likely one, but it might not actually be that good of a fit. It's happened to me many times. So the thing that I find really frustrating, well, there's really three things. Like one thing has been that during the time that I've been looking for a new job, there just hasn't been as many companies like seriously looking. Like really is like the hiring has gone down, and like a lot of the roles have been remote roles, so like you're competing with everybody else in the country. That's difficult, right? The other thing that's really frustrating is that companies are interviewing more people. So even if you get to the point that that I am here, where you're like interviewing with the team, there's probably 3 or 4 other people that are also interviewing with the team. So you still only have like a 20% chance of getting the job, right? But the other thing that I've found very frustrating, and this is specific to the role that I have with site reliability engineering, is that the technology stack in site reliability engineering is not very well consolidated. And, you know, every company is using different tools to do their monitoring and so forth. Generally speaking, under normal circumstances, you wouldn't care about that. You would really care more about their skill as a site reliability engineer, as it pertains to the particular part that you're having the biggest problem with, which is usually like, you know, troubleshooting quickly and that. So you'll interview for a job and you think it's going really, really well. And then when you get to the last round of interviews, you kind of find out that actually it's not that good of a fit. Like, actually, there are certain technologies and so forth that they hadn't mentioned until now that are really important that you could certainly pick up. But, you know, if there's somebody else that's already more familiar with that technology that get it right. Or actually, it turns out that, well, it is site reliability engineering. The role is mostly just doing automation, which I think is so. I tell you what. Okay, if you look at the Stack Overflow developer survey, okay, back-end developers, when you not excluding management positions, okay, back-end developer is the highest paid. Site reliability engineer is the next. Okay, so you're really paying people a lot to be site reliability engineers, and all you want them to do is automate pipelines, which is like the most simplest thing. Like, I think that if there was a role that was just automation engineer, pipeline automation engineer, that would probably be at the bottom of the stack in terms of amount of pay. So like, you're paying like $50,000 more to, you know, to automate things. Okay. But I've had jobs that like I got to the end and they were like that. And I was like, okay, I don't think I'm going to get the job because it doesn't fit with their tech stack, but I don't think I will work for them anyways. Right. This particular one seems like it's a really, really good fit. So we'll see how it goes. Okay. So I got, you know, into all of this discussion on things. We got to go back now. Oh, let me turn this off. So there's this weird thing where, like, if you want executions to plot, you can't have a strategy on there. The historical ones, at least. So let me remove that. So if we come back to yesterday, you can see where it took a bunch of trades. Let me try to change things up a little bit here. I'm going to change my candles here to like a monochrome. Yeah, to a monochrome scheme. So let's see here. Down bars will be transparent and up bars will be dim gray, and then the outlines will be dim gray. And that should give me like black and white filled candles. Yes. There you go. Okay, and then I'm going to come into the data series, and I'm just going to change the colors here a little bit, like these colors, and make this like a nice bright like cyan or something like that. Rude, how you doing? Did you? Oh, you know, I should do that. I think that we're totally there's still a couple of like weird things in there, but nothing that I think will affect any, you know, people will notice. So I think that I should update that. So let's do that after this, after I show you guys this. Come on, where's light cyan? Let's just do cyan. Cyan, solid. Oh, come on. Do I not have one where it's... Five pixels. It's, oh, it because it doesn't know whether the executions were long or short. It's not going to show me the lines. So frustrating. Okay, well, now let me add in our indicators. I'll add it manually. Fourier series analysis. So it took a bunch of trades. It was actually really interesting. So they were all shorts. So here you can see, okay, first short, it for some reason it decided to get in just before the Federal Reserve meeting, and that ended up being a winner. And then here's a winner right here, and here's another winner. Then there's this one as a loser. This one was kind of interesting to me because every time that it lost was very quickly. It was like it got in and like immediately, whoop, you know, it whips back against it. And what I'm realizing though immediately is that this strategy does not work the way that I thought it did. Because I thought that what I had it doing was, you know, when it gets up here and it flips back down around and comes down really hard, that, you know, it detects that turn and will go short, right? But what it is actually doing is it is when it comes all the way down here, that's when it's getting in. So it's, if you look at the entries, they're actually like almost always late. Like this one in particular, right? This was the bar that triggered it. The close of this bar triggered it. So it gets in on the next bar. And of course that ends up being like a terrible position. So what I thought was kind of like a little bit like playing the short-term mean reversion is actually, it's actually kind of trying to take advantage of short-term time series momentum, which I don't know. Like the parameters for it and everything are simple enough that I really don't think that it has been curve fitted. But just like looking at the way that it works and everything, I have less confidence than ever that it will actually work. But it worked. It made, what did it make? Here, let me pull up the stats. Let's pull up stats for it. New trade performance. Yeah, here you go. It took 13 trades. It won 9 of them. So it was 9 for 13. It was almost 70% win rate with relatively equal risk reward too. So like, should I complain? It worked. It worked. Doesn't work the way that I think it works, but it worked. Yeah, it's really, it's not bad. It was really not bad. I'm really quite impressed. I also was doing a little bit of back because once I realized what it was doing, I kind of went back and I was like, okay, wait, what if I do this? What if I do this? What if it, you know, I tried a bunch of different things, and like everything that I try, it makes it unprofitable. It's like makes it way worse. So I don't know. Maybe that's a bad thing. Maybe that kind of suggests that the strategy that it's doing is curve fitted in some way. But what is it doing? Basically, it is Fourier series analysis. This is an indicator you can go and find on the NinjaTrader ecosystem. And it is doing things when that crosses above and below 2 and -2. And with a moving average filter. So one thing I did do is I back tested, and the what is this called? The super smoother did improve the performance. So we'll probably shift to a super smoother. But otherwise, we just keep it running. Now, I wouldn't expect it to take a trade in this situation, because one of the things is that it needs a certain amount of trend to start doing it. Yeah, so it's essentially it's looking for the dominant cycle in the series. So if you look at it here, it's, first of all, you have to have a certain amount of trend, okay? But we've got a trend going, right? And then what it's doing is, okay, when this line comes down below -2, it goes short. That's it. So it always kind of ends up taking a trade after a big impulse. But it works. I can't explain it. It's something that I would not think works. Now, the thing that I was trying to do with it was like, okay, like it took all of these trades, and the trades that it took that failed were like, you know, would have eventually have worked. Like there was not a single one of them that it didn't eventually go lower, right? So I kind of would prefer it to just take it and hold it, right? But I haven't found a way to get the algorithm to do that in a way that doesn't screw up the other trades when it's not trending so hard. Maybe I need to do something like, if the trend is above 0.8, do something different, like try and take bigger targets or something. I don't know. But only for, so I have it back tested over 5 years. Yeah, I have it working over 5 years. Granted, the highest I've been able to get the Sharpe ratio is like 0.37. So I wouldn't call it an amazing strategy or by any means, but it's profitable over a 5-year time period. Oh, you know what we should do though? We should come into the strategy analyzer and come in here to the back test. So I tried making a second version of it where I, messed around with things, but kept the old version. So we'll do the old version on ES, and essentially we just want to run it on yesterday. That did not take any trades. Oh, right, because you have to have, you have to have at least like a month's worth of data. So like, let's go back to October. But what we care about is what it did yesterday. There it is. Yeah. They're pretty close. There's that one. Okay. Yeah, that's right. There's the one where it got stopped out. Here's the other one where it got stopped out. Do the prices match exactly though? 613475. Whereas this thought that it got. Okay, so there might be some slippage going on. Yeah. In fact, it's saying that there's almost always at least one tick slippage. So if we come in here and just add slippage of 1 and come back and do this back to 2019. 0101, let's see if it survives slippage. Let's add 2 ticks of slippage for Bartel's score. I haven't heard that, but Tilt says, yeah, it's a Euler's cycle. It is a Euler's indicator. Oh, there you go. Does not survive. Does not survive the slippage. I think. So let me come back here and I just go with a 0 slippage and I do it. It says that works. Well, I might be able to help that a little bit by telling it to take like. Actually, I'm not quite sure. I'm just telling it to enter long and enter short, and I don't know if changing them to like limit orders and things like that how much that would actually help. But very curious. So 2 ticks of slippage. 2 ticks of slippage ruins it. Now that's like 2 ticks on both sides probably, right? So I don't think that's... No, it's not the roofing filter. On the longs, it's a good profit factor. Now if a 1 slippage, which I think is a little bit more realistic. Oh, you're right. I'm not including commissions. You're right. I add commissions. 1 tick in commissions. So, because I've kind of been going through looking at it and being like, well, like it's working, but I don't think it should. Well, that's not right. Hold on. What's wrong with that? Edit account. Missions. Lifetime license. Okay. Run. Yeah, I didn't have the account set up correctly. Let's try that again. Better. Ooh, it loses a lot in commissions. $14,000 in commissions. Wow. But let's come to this graph. Yes. Yes. Interesting. Very interesting. Okay, well, let's go back for a second. How do I want to add this? I do want to add my better, the one optimization that I found yesterday, which is to use a better moving average, essentially. KMA super smoother is what we want. Yeah, okay, so... Actually, I have something called IR Super Smoother that I kind of like a little bit better. Where are ya? IR super smoother filter. Just draws it a little bit differently. Using blah 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 blah. Tuples, moving average. See how that improves things. So it should increase the total net profit a little bit. So I was finding that it helped my Sharpe ratio considerably. Yeah, it did. Total net profit 20. Although, interestingly enough, you get a little bit more variance. Okay, so supposedly it survives. Supposedly it survives that. It seems to me that it fits our qualifications really well, if I can put it that way. That we wanted something that like appears to be profitable and has periods of profitability that will like pass combines, but that it's deceptive, right? That's what we were actually looking for. We weren't looking for something that's like, I'm gonna go and start a fund with this, right? So it seems to be doing it the way that, or the historical performance seems to match up with what it should, but I could do one more test here, which is if we go through and do the optimizations, so save history faults, and then change the stops and targets. So I'm gonna do it. I'm gonna do it like a really broad one. I'm gonna go from 0.1 to 1. So these are basically 10% of the average true range. That should give us 100 different ones. Let's not do. Let's keep it relatively limited. Let's just do the past year for this optimization. Oop, and when I did that, did it keep the whole? Yeah, okay, slippage and commissions. Yes, okay, cool. Could be that, like, you know, once you include commissions, you know, what ends up being the most profitable changes. And indeed, it seems like that is the case. By the way, what was I optimizing on? Max profit factor. Okay. Wow, a target of 0.2 and a stop of 0.9? That. Okay, so something that I find really weird about this is that when it comes to the stop, there's like this wave. I've never seen that before. There's two places where it does well. What's with that? It's kind of weird, right? Okay, it should be like this. Should actually do it the other way. We should do it. Target. Stop. There you go. Bigger your target is, the more you make. Bigger your stop is, the more you make. But there seems to be this area around 0.3 where it seems to do well. Now it's truly the degenerate gambler, right? Not bad, actually. What do you mean by it can be further expanded and this strategy will become even better? What, the stop? I could go all the way to 2 times the average true range. Then it would like never stop out, probably. Oh, no. I mean, I'm trying to keep the parameters relatively simple. There's a lot of strategy. There's seemingly a lot of strategy parameters in there, but you don't actually want to change those. So there was some things. So we're only taking it when the average true range is between 1 and 2%. That's the key there. We're only doing it when the R2 is above 0.5. So that's what this is. There is a period on the R2, but I found that period works really well. So really the things that you can kind of like parameters that you could optimize to like overfit it with are really this FT thresholds. Really the FT threshold to stop in the target. Now the issue with the stop and the whole thing with the stop and the target is that like, you know, the bigger that they are, probably the more profitable it is, but like the less trades that it takes. So it's not necessarily what we want. Now I also I told it to do it on profit factor, not, I actually wanted to do it on max net profit. I don't know if that will change anything, but let's see. Curve fitting is fun. Oh, I did pick a slightly different one, I think. Ah, a target of 0.2 and a stop of 0.4. That's more like it. That's more like it. Can you look at the time of day? I mean, this wouldn't really, I don't think that this particular strategy would jive very well with time of day kind of trades. I've had a lot of people show me if you buy this asset at this time of day or this day of the week, that it's like net profitable. But I'm a little bit skeptical about those ones. I'm like, oh, can you look at the time of day, like when it entered and exited? Yes, that is an important part. Yeah. So if you come in here on trades, is it? Oh, you know what? I would have to pull it in. It wouldn't. It's not going to have all of that. But I can pull that up in a second. But I want to drill on this a little bit more really quickly. So it was around spot 2. Because I think that the stop that I was using before, where's this ninja script? I was using 0.22. Now let's just use this one. Open a new strategy analyzer tab. Point 2.4. Now we're going to change this to go back to 2019 and save history. Okay, so that did not. So this is a good example of where you're maybe curve fitting, right? Is that stop and target did not survive the 5-year, did not perform as well over the 5-year. But now I should be able to come into trades and it will tell you, right, the entry time and exit time. So one of the issues is if you limit it to only trading during like when we're here on the stream, it's probably going to make a lot less, right? But like I said, the purpose of the degenerate gambler is to make something that passes combines and seems like it works. It does not actually... Yeah. Now, so interesting. So one of the first issues is if you were to trade this with like a single micro contract, you wouldn't pass combines with it. Like it would take too long. So you would probably want to do it with something like 5 micro contracts or something like that. I guess with 5 micro contracts, so you can have like multiple targets and stuff too. So it's actually a really good idea because you could have one is that goes for the regular stop that goes for a target that's equal. Sorry, you can have one that has a target of half of your stop and one that's equal to your stop and things like that. Could be interesting. It's also kind of curious that it's like this beginning part where it doesn't do well and then... Because basically what happens is this strategy has a left tail and you just happen to encounter the tail at the very beginning. Right? There's tail, there's tail, there's a tail. That's really the one. This is what happens to most traders. This period from here to here looks so much like what a retail trader would go through, right? Okay, they doubted it first, but then it works out. You're doing really well. And then we come all the way back and you're like, oh, that was so stupid of me. I shouldn't have done this, yada, yada. Okay, I'm going to do better in the future, but it's okay. We didn't blow the account. We're going to keep going. Look, see, I'm so great. It does work. And then, oh, it's not going so well. It's not going so well. Boom. And you go, oh, well, because I wasn't doing so well over here. And, you know, it just got in my head and that's why I blew the account, right? And you blame it on yourself instead of on a natural property of the strategy, which is that it has fat tails. Right? By the way, coming back to this, Well, let's just do a straight comparison like this. There was, what's the value? So we can get just a direct comparison between the two. Okay. Yeah, that is what I want. That is what I want. So we're going to change it. To be stop up. 0.4, and it is, yeah, it's using the super smoother filter. I'm going to close this window. Remove this thing. Yes, you can add this right. 0.4, 0.2. History. So now it should add stuff. Okay, let's see. So this is why I like the IR one, because it shows me when because I'm doing it based on when the moving average is rising or falling. So it shows me when it's shifting. So we can see right now we're above 0.5 and we are rising. So it could potentially take long trades here. So we'll just see. We'll just see. Let it do its thing. The thing that I think is interesting about it is, like, again, if you take a single 1 minute time price series, good luck. You're not going to be able to find much edge in that. It's just not very effective. When I say it's not very effective, that doesn't mean that it's impossible to make money from it, right? It's just that there are other things that we know that are way more effective. Like the effectiveness of something on a 1 minute chart like that, kind of iffy. But the effectiveness of, like, you know, doing the same on order flow, you know, now you kind of stand a chance of something that, yeah, you can kind of work something out. I don't know if it'd be worth it in the long run, but you can kind of work something out. And I should probably be doing a little bit more work on that, but I don't know. So we started with this one, so let's work with that one. But anyways, super, super interesting, right? Awesome name. I don't really feel like it is an awesome name, though. Like, I think that we should get a better code name for it, but I don't want you guys to spend your energy thinking up of robot names. You know what we need to do if you want to think about branding? What should we call our trading platform? We want to make a trading platform. I think that there needs to be a brand for the trading platform that is different from my brand. Right? Because I think that the brand is kind of more what do you feel, what do you think about when you think about Speculator, Seth, right? when you think about speculator Seth, you should be thinking somebody that has the highest integrity and somebody that relies on the data and is about being informed, right? I think those are the big things that kind of come to your mind with that. For our trading platform, I think that I want a different kind of a brand for that. I think for the trading platform, I think that your brand is like, I want you to feel like that you are using the most advanced trading platform available, right? Like that's the thing. And here you have complete control over your data. It's designed to do these order flow things, including order flow things on stocks from the very get-go, and including even backtesting on market depth things from data that you save yourself, right? That I think would be the platform. So we have to come up with a brand for the platform. Orbit. That's kind of, that feels kind of left field, but I that's not bad. It's not a bad pick. Wait, where's our yeah, over here. This is my really silly. I things I need to. I don't need to make notes about what. Here I am trying to justify my notes, right? I'm doing some stuff with Rust. I want to memorize these things. It's like I got to memorize it. It's Rust C because like mess with it for a while and then forget and come back and I don't remember the name of the compiler. I don't remember the syntax. I want to memorize that syntax. So that's what this is all about. Here it is, platform. No, but on this one we are going to bootstrap. So one on that one. No, see, I think that the trading platform name should not have anything to do with speculator Seth. See what I'm saying? Like it needs to be a brand that is separate from me. Because eventually, you know, with a company, like if that goes like best possible circumstances, then you grow a whole company that is well beyond me. And at some point, I'm selling it, essentially. Like, you know, there's going to be a certain point at which I'm too old. And, you know, other people need to be running it for us. So it can't just be about me. And the marketing and everything about it needs to be more about what that platform can do for you than it is how cool Seth is and you should use this platform because it's Seth's, right? Proja, I don't know why that doesn't make sense to me, but okay. I was trying to find something that, like, because I think that the kind of the key things that this platform would have that other platforms don't is more advanced data management. So I've been trying to come up with something that kind of reflects that would tell people that this is a platform that if I really want to dig into the market data and do heavy data-based research, that this is the platform I want to use. And I haven't quite found a way to express that. So think about it. I don't know. If I I have many job offers out, or not job offers, but interviews out and going, and I'm much more hopeful that we'll find a new day job in January. And you know, who knows, might kind of shift things where, you know, like if I get one where I start at 8 o'clock in the morning and I'm only able to stream for an hour, that's kind of like gonna shift things. I don't know. Could it be like I just don't spend as much time on the YouTube channel and I just focus all of my free time on making the platform? Maybe. We are going to, though, make a lot of video content about the indicators, because I really think some of these indicators, man, especially this inventory cost basis, man, I have really not, you know, gotten everything that we can out of this, because the way that it does this, it's like I can literally pull up any chart and show you, and like literally any day in the 10-year treasury and show you, and you'd be like, oh yeah, that's useful. Like, and stuff, it has a bunch of suggestions there that really sound to me like they were made up by ChatGPT. Did you throw that into ChatGPT, and stuff? Because those are some of the ones that ChatGPT. President-elect Trump says Congress should get rid of the debt ceiling. I would support that entirely. Really interesting. Is that why the treasuries are selling off a little bit further here now? Of course not. It was Gemini. Flux, Echo Trade, Quanta. You can't use Nova Trade. That's me. If I search for Quanta, it seems like that would be something that, yeah, okay. Quanta Services, Quanta Magazine, Quanta Trading. Yep, it is. It exists. The domain is already taken. Yeah, making a brand for a platform, I think, will be a real struggle, because there's so much stuff out there already, right? So finding something that's unique and really amps it up, I think, would be really hard. Uzi fans, that's funny. We should I'm watching this iceberg at 21.5 here. There's a 3K. Actual data platform. Bloodbath continues, says, like, okay, they cleared it. They put a good bid at it. Maybe it's not a big deal. In here, I just had a thought. Something that drives me crazy is that, like, the sharing of files and so forth for a platform isn't always straightforward. It should just be a file somewhere. Okay, now there's an iceberg on the bid side. There's a relatively high. Let me come back over to here. Okay, maybe not. I'm gonna say I feel like that the amount of level 2 activity that I'm seeing seems a little high, but actually not. The market order imbalance in ZN is very curious here. Is actually in favor of buying for most of this. Only recently, and it's coming back down to equal. So this move down isn't necessarily a large meta order as much as it was that, like, people buying it for the mean reversion and not getting the mean reversion and puking it. Let's see here. El Salvador's official Bitcoin wallet Shivo to be sold or discontinued after agreement with the International Monetary Fund. Yeah. Well, this has been going on for a week. Uzi, like, basically it's not going to be legal tender in the country anymore because that was like a condition for them to get loans from the International Monetary Fund, which is kind of crazy. Like, I mean, they're up on their Bitcoin position now, right? Like, they still have the Bitcoin position, so I don't know. This is kind of wild the way it works. This is why, like, when people say that the US is going to create a strategic Bitcoin reserve. Okay, so they have, like, coins already, and I would totally support the government making a strategic reserve and saying when we confiscate Bitcoin from people, we don't necessarily sell it. That makes sense. But the US government, like, actively buying Bitcoin? Are you kidding me? You have any idea what kind of a firestorm a proposal like that would start? All of the crypto bros think that that's what's going to happen. I really don't think that that's what's going to happen, because the powers that be would flip out. They would be ballistic, and I don't think that Donald Trump is wedded enough to Bitcoin to overcome that kind of pressure. There's no way. And I think that the perfect example here is that El Salvador is basically backtracking on its all in on Bitcoin. Government will buy Dogecoin. Please, no. Dogecoin one bothers me the most because it can never really be anything other than like a pump and dump, right? Sustainable Ponzi, yeah, but it's just the supply. I don't know. Maybe the demand for it is now high enough that the high supply of it doesn't necessarily hurt it, but still, just you know, if the only reason that you get into something is for the speculation, that really works against the speculative asset that there's like an insane amount of supply always coming through it. Now, that actually reminds me, by the way, because, you know, the S&P 500, they've taken a hit for sure. And I wonder, the big crazy thing that's been happening has been the MSTR MicroStrategy. So did they get hammered yesterday? By how much? How bad was it? Well, I think we need to come out to a daily chart to be able to see. Okay, so they have been struggling a little bit lately. Yesterday's candle wasn't too bad. There's a little bit of support here that might freak people out. Okay. So it might be happening, but it hasn't yet. Man, I can remember when it was at 160. That's so funny. It's absolutely bonkers that it's at 400. That it was at 400. I've seen a bunch of posts that were like, if Bitcoin falls below $20,000, then MSTR would basically go bankrupt or something like that. But I kind of wonder, is there a stock price at which MSTR can drop below, at which they're possibly forced to sell Bitcoin to raise capital? Like, so there was a study where they showed that like you can build up an options position where the option position gets so big that it's basically guaranteed to blow up. That if you have to sell it, there's always that little bit of if, but if you're forced to sell any of it, it will just become a self-reinforcing cycle, and it will pop all the way back out. And showing that the amount was not a crazy amount either. And so the recommendation was that regulators should factor in the impact of size on like their margin requirements, on the mark-to-market rules. That what you mark to market shouldn't be the closing price of the day, but the closing price of the day minus your market impact if you were to sell all of it. Right? And so I wonder if there is something like that could happen in MSTR. There's a point at which it's come back hard enough that it'll just go all the way out. and then they'll have to start selling Bitcoin, and then Bitcoin will really, really drop. Someone's working the 2-year bid. I would say that I've seen that across the board. Like, again, look at the market order imbalance here. For most of the morning, it was actually in favor of the buys until we got to this point, and then we started moving down. And that moving down was actually just the market order imbalance coming back to a 50%. So that was probably actually longs getting trapped and puking, but not actually a large meta order at work here today, which is a little surprising and interesting. Anyway, we should switch this back over to here. Just, you know, keep an eye on it in case we get a trade. I might need to, you know, on this Fourier series analysis, I'm doing it on 2. So I might need to come in here and do a little bit of back testing again and try higher values like 20s. Maybe I could get it to do what I think it should be doing if I use higher values here for these. And then it would get into the trade earlier. I feel like the trades that it takes is just like way after what the trade that I wanted to make. At least on yesterday's chart. So yes. I was also comment on one of my videos. 10 to 15% is nothing. Why even waste your time just investing in the S&P 500? Well, so first of all, I wouldn't anticipate that the S&P 500 returns 12%. But even small percentage amounts can actually make a big deal in the long run. For one thing. Another thing is that you might not beat the S&P 500, but you might get a better risk profile. So there's advantages to that. Some of it is just you want to be involved. Like, hey, I don't think that you have to come in here and, you know, like if you hate trading and you hate doing this and you hate working and you just want to make the most amount of money possible so that you can go and party all the time, then yeah, I can understand why you'd feel that way. But, you know, for those of us that just really enjoy the market, anything that keeps your head above water is worth looking at. Because even just keeping your head above water is hard. They're going to shut down the government together, I guarantee. No, I don't think that Donald Trump wants there to be a government shutdown, actually. There was some things in that bill that they recommended yesterday that I really don't think are going to come through. They really want to pull out a buy out of this, don't they? I don't know if it's actually going to work, but they're trying. No, I'm just thinking about this with the R squared. Why have I never tried filtering on whether R squared is rising or falling? Kind of interesting. Let's try a test real quick. Gonna copy over Degenerate Gambler 2. Okay. Now I'm going to come in here. And instead of saying my R2 is over the threshold, I'm going to say is rising my R2. That's interesting. That helped a little bit too much. Come on. You having a little trouble here? For some reason it just doesn't like the... Oh, maybe I can't. There we go. Georgia court removes Fannie Willis from Trump election interference. I thought that that case was already dead. Yeah, whatever. So if this backtest still comes out profitable, then I'm really going to be puzzled. Aha. Oh yeah, that's terrible. Okay. Okay, so we're on the right track here. Now, what about this? We only want it when it's rising in. We only want it when it's above 0.5. That decreased the total net profit but it increased the Sharpe ratio. So if I think about R squared, I can kind of separate it out into 4 different quadrants, right? It's below 0.5 and falling. It's below 0.5 and rising. It's above 0.5 and rising, and it's above 0.5 and falling. And I have basically just said only trade when it's like this. When I looked at this one and this one, it didn't really do anything. Or it was really bad. I kind of, with the way that I was designing the strategy, I kind of thought that it would be best to be right here. Oh wait, did it just get rid of all of my notes that I had just written there? Haven't looked at, do you have shorts on how to make a bot and what the most important indicators are? Well, so I have a video series about the programming side, and there's a couple of videos in there where I program robots, but mostly I show you why they don't work. Like, what are the most important indicators? Well, two hints that I'll give you is that super smoother on short-term charts, super smoother tends to make a really good filter for trend. And R2 tends to make a really good filter for trend because R squared in NinjaTrader is basically telling you how trendy it is rather than just are we up or below trend. So that's what I'm doing right now is I'm just kind of realizing something kind of interesting about R2. Oh, I see what happened. Gotta find a way to make this be like... okay. How do I parameterize this? Hmm. Am I just gonna do the 4 different quadrants? There's not just 4 different quadrants, because then there's 4 different quadrants, but then there's also this half and this half, this half and this half. Anyways. I'm gonna move this over here. This is getting a little bit messy. I can sometimes when you're having like really complicated logic, or not. It's not necessarily complicated logic, but it is like I'm going through all these different iterations. Like writing a really naive approach to it, and you write it out, and it's clear how to consolidate it. Look at the yen. The yen is getting slaughtered, dude. Okay, so there are 4, 8, 9. There are 9 scenarios. Look at the Korean won. Oh yeah, look at this. Look. Are they still down? Oh, no. It's come back big time. Almost back to where it was before, at least. Not quite back to where it was before, but... Man. I don't know. So... buying during the initial volatility would have been okay. But there was a period about a week afterwards where it was really, really dire. So that would have been like a really stressful trade. I don't know if it'd be worth it. Is that tough? That's, you know, you have to kind of factor in the best trades are the hardest trades to hold, right? who's this guy named Powell that is, he is the chairman of the Federal Reserve. He gives a press conference after they set interest rates, essentially. Oh. Well, I'm just getting rid of this one and just say if it doesn't match all of these, any of these, then return true. Don't use it. Not buying 480,000 NVIDIA chips. It's an R2 filter, FJIL. Eight. I think I'm gonna look at this. What's the highest that this ever gets? And 20. It's yesterday's movie, yeah. Okay, it gets into the 20s. 25. So let's do 0, 0, 5, 10, 20. So we're gonna have to come in here. Degenerate Gambler 2, optimization run. Optimize these booleans. I'm going to leave the stop and target the same. Those seem to be values that work that kind of give us the outlays that we want, although we could try. Actually, let's change the stop. So do from 0.2, 2.4, 5.2. So that's already 16. And then the FT threshold, we are going to go from negative 25 to 25 by 5s. And this is going to be a pretty decent number of iterations, so we're only going to do a year. And we are looking for max net profits. Okay, 352 is not bad. this out of the way. I'm sitting here saying in my mind, okay, like this is the last little back test we can do today. But you know that there's something gonna be in the results. I'm gonna be like, wait, what? Wait a second, hold on, and then I'm gonna want to test something further. But everyone near me is saying buy Tesla. Ugh. You know what? It might be what is Tesla at? After that decline. I don't know if the no, Tesla's at all-time highs. So these are one of those ones where it's like I really think Tesla's overvalued, but could it go higher? Sure. Well, you know why they're saying Tesla is because Elon Musk has been pretty close with the incoming Trump administration. That's why they're saying that. So they're saying that Tesla is going to get favorable treatment, essentially, right? I don't know if that's the best buy, though. Kind of wonder. Let's come back to our Koifin. Haven't been there in a while. Who's been hurt the most? Silver, 17%. Gosh. MSTR down 21%. Coinbase, 13%. So cryptocurrencies are getting a pretty decent pullback. Interestingly enough, Reddit is up 17% this month. Huh? Nvidia down 10%, so it's not terrible. Wow, Tesla's up 30% this month. Oh, I don't know about that one, man. These ones aren't bad. So like Welltower and the Ensign Group, this is you know, basically old people. You're investing in old people, and this is a decent pullback on something that has been returning really, really well. So yeah, it looks like the whole kind of energy and nuclear complex has really come back. New scale. New scale is super speculative, and there was kind of a move. And so let's come back. I hate that it keeps changing this on me. All right. Ah. Interesting. So, I think it was it as far back as March? I think it might have been as far back as March where we saw this initial rise and we were like, what's going on? Because basically what happened was, oh man, is that as far as it goes? Oh, that's actually makes it even more interesting. So here it was like, it was super speculative. It was doing well. And then like, basically they were looking for a certain approval or something like that, and it didn't happen. So you got this downtrend. Like it sucked ever after that. And then there was this freak buy. And it looks like more recently that it's done well. Granted, some of that might be just we're in a market bubble though. still super. So that makes that one of the more interesting ones. Like, yeah, I mean, especially if it were to come back to $10, I would think that it would be a good buy. Yeah, I wish I had bought it. 'Cause I had the opportunity to. Barton Restaurants is up 14% over the day. That's really interesting because they've been sucking a lot lately. What about the evil companies? Oh, not the evil companies, the dogs of the Dow. Dogs of the Dow strategy hasn't performed that well this year. The only one that really came out with an okay win was Walgreens, but like I think that that's still underperforming the S&P 500 there. So yeah. Soundhound just continues to chug along there apparently. Wow, is that really up 745% over the year? That's crazy. Medical stocks, United Healthcare Group still down. Net shooting. I have a really good watch list, man. I'm coming back and I'm looking at this and I'm like, all these things that have happened recently since I've looked at my watch list, like I'm seeing signs of them in there. Like I have a pretty good coverage of the market with this. Boeing is up 20% on the month? Really? Kind of seems to me that investing in evil companies isn't a good bet this year, though. What is Sable Offshore? I do not know. One thing that does happen with the Chinese yen, for instance, is there's like an exchange rate in China and there's an exchange rate outside of China. That like it's the price that you get is different if you trade it in Hong Kong versus Beijing because the markets are regulated. So offshore might mean, you know, it might have something to do with where that asset is spot or what exchange it runs on, right? They're basically saying that it's like Sable is some company, but you're buying it not in the country that it's from. My guess. It's been chugging along for 10 minutes. One more iteration here. And results. That's good. The top one is good, but which parameters did it pick? Not using the rising and not using the trending, by using use rising and use trending. Wait, which branch does that take us to? Hold on. So not use rising and not use trending should just return true. Oh, very, very, very interesting. Okay, so that one probably comes out on top because of the number of trades that it takes. That's a little curious. Well, what is the FT threshold? 0. No, that can't be right. That can't be right. Maybe that is right. I think that, but shouldn't there be two up there like that then? Oh, wait. Oh, use rising and use trending are both true. But rising and trending are false. Oh, so it's this one. I see. So it's saying when we're falling and we're under the threshold. Okay. Oh, that actually is what I thought it was gonna, is the one that I thought would work. Oh, dude. But it still wants FT threshold 0? Huh. Huh. Okay, so on this. Oh, okay. I don't know if the performance on that is necessarily what I want, but... Oh, by the way, is it using the bigger stop? Yes, it is. Okay, cool. Optimization graph, and then net profit, and FT threshold. Interesting. So it looks to me like it likes the FT threshold at 0 just simply because it will cross that line more often. And it seems like a 5 is okay. Like, I bet this second one is a 5, huh? Oh, it's not. This is very, very interesting. Yeah, interesting. So when you do the one that does a lot of trades, you want to have the big stop. Otherwise, the stop doesn't actually matter that much. Huh. Huh. I guess there's one where he had a small stop and it did really terrible. There are some setups, though, with it crossing 0 that don't work very well. So this strongly... I think that is something that could point to this being a curve-fitted result. But I do like the result that it came out with, because the whole thing was, okay, if this is the amount, if this is R2, the amount of trend. So when we're rising, it means that the consistency of the trend is increasing. So again, if you have a trend that looks like this, then you're going to get a reading of 1 in R squared, because it's like perfectly autocorrelated, right? Versus when you get something that's like this, you're going to get 0. Okay. So what we're saying is when there's a low amount of trend, so it's below 0.5, and it is falling. So when we are getting the mean reversion is when this kind of trade with the cycle indicator works best, because you're identifying a mean reverting market, and then you're using the high pass filter cycle kind of indicator to determine the trade to take, and you're still using the larger trend as well, and the large stop and all of those sorts of things. And that is when I tried this before, it was like, oh, it works better when it's trending, and I was like, well, that's not quite right. But that's because the trade that it was taking, it was actually like, it's already like really moved. So that's really interesting. It probably takes a tons of little trades. So if we changed limited the time frame at which it traded, this might be different, because during our active session, you're going to get more of those swings in the 20s and stuff, right? So I kind of want to know what these look like. But for this one, let's open it in a new tab. Just gonna run the back test to see. This one's probably taking a ton of trades. Okay, and then let's go back to 2019. Can you play with the strat too? Yeah. I mean, you can see the code. So I don't want to post that one like just in the Discord channel, but if you message me on Discord, I'll send it to you. How about that? You can see the Sharpe ratio really goes down when you put in more data, but that's what I would expect. That's so interesting. It is a little bit better. It is a little bit better than what I was doing. I kind of wonder if, oh yeah, we could do it in the paid Discord. Yeah, let's do it that. Let's do it that way. I'll put it in the general channel. Strategies. You know what? I'm gonna have to actually do it. I'm gonna have to export it the proper way here. Hopefully this works. The problem is that it uses a couple of proprietary indicators. So let's see if we can, if it'll do this correctly or not. It's gonna want to. It's gonna want to include a bunch of indicators. Yeah. Oh, it includes base strategy. Oh, that's just for logging. Multi-asset APR. So this one is one of my indicators. So if you don't have my indicator package, it won't work. Well, it'll work for the 2-week free trial. But yes. Okay, I think you should be good then. There you go. Just to be clear though, this strategy is not meant to be an effective long-term strategy. It is intended to be something a little bit degenerate, something that if luck is on your side, you can do well with for a while. Is kind of more of the thing. So yeah, see, I was saying like that's all the back testing that we have that we can do for today. I need to go back, limit the time that it can trade using the advanced based strategy. I think there's a lot of things in this advanced based strategy that you don't necessarily want to include though. Like the start time and end time, stop time, managing time part, I think should be included. I need to do a thing. I wonder if I can set it up. I wonder if I can create it as an interface so that like I can have an interface manage time, interface manage streaks, interface manage losses, refactory period, that all of those sorts of things. After halt, before halt. Oh yeah, it even does the new stuff, right? So this is kind of why I don't necessarily included those in this strategy, is then it gets to, then I can't share it with people. But I can just copy the manage time bit out and put it into it, and then see, and then rerun the curve fitting part of it and see if during the most active parts of the session, if the one going across the 0 still comes out as the best one, or if this one that's coming out as 0, the one that's coming out as the best one, it's doing so because it's trading a ton during the extended session and stuff, right? But it did do something that was kind of like I got some, it came closer to the performance that I wanted, which was it's trading during mean reverting times. So that is crazy, actually. I tell you what, man, if you started it right there, probably pretty happy with it, right? Especially if you decide to only trade it long. But if you decide to only trade it long, that might include certain trades and stuff, so that doesn't necessarily help you. Also, the probability isn't super high, so... And the R squared is, like, way too high? Yeah, I don't know. I think it's likely to be that before I think they were kind of picking up on something that I'm like, I'm surprised that this works, but it seems to work. Now I think that we may have curve fitted it a little bit. So I don't know. Pretty interesting results though. We can continue this tomorrow. We'll be here tomorrow, but I got stuff to do. So I will see you guys tomorrow. Stay excellenting.